Hello everyone. In today's session, we are discussing Financial Accounting 3, Program Commerce Semester 3, University Mangalore, Session 65. Recap of previous class. To make distinction between dissolution and sale of firm. Need for dissolution and sale of firm. Learning objectives to make the students analyze the concept of purchase consideration and its calculation, to prepare the students for accounting during dissolution and sale of partnership firm. Learning outcomes. Students are able to analyze the concepts related to dissolution of partnership firm. The students are able to prepare the accounts on sale of firm. In the session 65, the problem what we deal is with adjustment of capital. The adjustment of capital which takes into consideration the distribution of shares and debentures of new company and the allotment of shares and debentures to partners in their final capital balance. Firstly, about distribution of shares and debentures. In case of sale of firm, the shares and debentures received by the selling firm or partners from the purchasing company are distributed in round figures because the shares cannot be given in fractions. So, therefore, whatever the amount of shares to be distributed among the partners, it should be rounded off to the nearest rupees 10 if the face value is rupees 10, or 20 if the face value is rupees 20, or rupees 100 if the face value of the shares are rupees 100. Generally, it is assumed that in case of India, most of the shares have the face value of rupees 10. As per the Companies Act 1956, a company can issue a share which with face value of rupees 10 or multiples of 10. But however, in the recent years, now we can note in India, the equity shares do not have a nominal or face value because there are certain companies which pay or issue shares of rupees 1 each, 2 each, 5 each, 10 each respectively. So therefore, for accounting purpose, it is generally assumed a share price of rupees 10 each and rounded up to nearest rupees 10. The second one is allotment of shares and debentures to partners in their final capital balance. Generally, if the problem never states about the distribution of shares and debentures so received by the purchasing company, the shares and debentures so received will be distributed among the partners in their final capital balance, that is, after making all the adjustments of the partners. But however, if the problem states the shares and debentures are distributed in their profit share ratio, then the shares and debentures can be transferred in their profit sharing ratio. So let us explain this concept with a problem which is enclosed in the study material along with this video. The problem relates to sale of partnership firm with capital adjustment of session 65. So now I read out the problem, then we can discuss the problem in detail. The Sunshine Company Limited was formed to acquire the business of Akash and Biswas, who were sharing profits in the ratio of 2 is to 1. The balance sheet as on 31st 3 2020, liabilities, bills payable 7,200, creditors 21,600, Mrs. Akash loan 3,200, general reserves 20,000, profit and loss account 6,000, capitals Akash 64,000, Biswas 40,000, assets land and building 60,000, machinery 26,000, stock 24,000, debtors 23,200, bills receivable 6,400, investments 4,800, cash at bank 9,600, goodwill 8,000. Total of the balance sheet is 1,62,000 rupees. Additional information given. It was agreed by the company to take over the assets at book value with the exception of land and buildings and stock which were taken over at rupees 70,000 and 20,000 respectively. The investments were retained by the firm and were sold for rupees 4,000. They also discharged the loan of Mrs. Akash. The company takes over the remaining liabilities. The goodwill is fixed at rupees 28,800. The purchase consideration is discharged as follows: 12,000 equity shares of rupees 10 each and the balance in cash. Prepare necessary ledger accounts to close the books of the firm. So in this problem, if you refer, the company takes certain assets and liabilities only. Here, as mentioned, they have not taken the investments, but all other assets has been taken over by the company. And on the liability side, again, Mrs. Akash loan is not taken over by the new firm. In addition to that, the company has paid an amount of 28,800 for goodwill. And if you go for the solution of the problem, as mentioned earlier, in sale of firm, generally we have to prepare five important accounts. The first one is realization account, the second one is partners capital account, and the third one is new companies account. Here it is Sunshine Company Limited account, and the fourth one is equity shares in new company account, that is here equity shares in Sunshine Company Limited account, and the last one is bank account. And as per the solution, first we will prepare the realization account. The realization account, we have to transfer all the assets and liabilities, and followed by for purchase consideration and for the discharge of loan of Mrs. Akash, and for the sale of investments we have to pass the entry, then we have to calculate the realization profit or loss. So for transferring all the assets, so we have to transfer all the assets whether it is taken over or not taken over. So the entry are realization account on the debit side, to land and buildings account 60,000, to machinery account 26,000, to stock account 24,000, to debtors account 23,200, to bills receivable account 6,400, to investments 4,800, to goodwill 8,000. For liabilities taken over and transfer of liabilities, by bills payable account 7,200, by creditors account 21,600, by Mrs. Akash loan account 3,200. Next, for receiving the purchase consideration, so if we calculate the purchase consideration, so we can come to a conclusion. The land and buildings are taken at 7,000, machinery 26,000, stock 20,000, debtors 23,200, bills receivable 6,400, goodwill 28,800. Total will get 1,74,400, from which we have to deduct the bills payable and creditors 7,200 and 21,600 respectively. So the total amount deducted is 28,800. The net amount received purchase consideration is 1,45,600. So which is recorded on the credit side of the realization account. And the next entry for realization of investment, the investment worth rupees 4,800 was sold for 4,000. So we'll record for the net amount of 4,000 on the credit side of the realization account as by bank account 4,000. On the debit side, for payment of Mrs. Akash loan, so we have to make an entry to bank account rupees 3,200. Then we can calculate the realization profit. So the realization profit we have to be transferred to Mr. Akash capital account 17,333, to Biswas capital account 8,667. Total of the realization account is 1,81,600. Next, we can prepare partners capital account. In partners capital account, we have a balance. By balance brought home 64,000 and 40,000. Reserves transferred as given in the balance sheet By general reserve account 13,333 and 6,667 in the ratio of 2 is to 1. Profit and loss transferred by profit and loss account for 4,000 and 2,000. Realization profit 17,333, 8,667. On the debit side, for receiving equity shares or distribution of equity shares to equity shares in Sunshine Limited account 80,000 and 40,000, the balance is settled in form of cash or bank. For Akash 18,666 and for Biswas 17,344. Total of the partners capital account is 98,666 and 57,334. Then we can prepare Sunshine Company Limited account. For purchase consideration, you will pass the entry on the debit side to realization account 1,45,600. For receiving equity shares, by equity shares in Sunshine Limited account 1,20,000 and balance it is assumed received in the form of cash 25,600. Total of the account is 1,45,600. The next account is equity shares in Sunshine Limited account for the distribution of equity shares. So they received a total equity shares of 1,20,000. So which you will record on the debit side of the account to Sunshine Company Limited account 1,20,000. And the shares are distributed in their profit sharing ratio, that is 2 is to 1. So thereby the entry on the credit side by Akash capital account 80,000, by Biswas capital account 40,000. Total of the account is 1,20,000. In the last stage, we have to prepare the bank account. So in the bank account, we have a balance of 9,600. So thereby two balance brought on 9,600 and they have received 4,000 from the realization of asset. So to realization account 4,000, that is realization of investments. And again for purchase consideration received in cash to Sunshine Company Limited account 25,600. On the credit side, they have paid Mrs. Akash loan 3,200. So thereby the entries by realization account 3,200. And for the final settlement of partners by A's capital account 18,666 and by Vishwas capital account 17,334. Total of the cash or bank account is 39,200. Thank you for hearing.